Where'd all the bulls go? The bulls didn't want to play last week. The bears controlled the S&P 500 for most of the week. They ended up pulling the S&P 500 down 1.03%. So we're going to get into that, but first we want to go over the momentum, and then we'll go over the nitty-gritty of the S&P 500, and then we'll get into this week's operating plan as well as some things that happened last week in the portfolio. First things first, look at the overall context of the S&P 500. The first thing that we're looking at is momentum. 12-month momentum to be very, very specific. The momentum is still up in the S&P 500, and it's still greatly outpacing U.S. Treasuries and the MSCI All-World ex-USA Index. Now, there is something very, very, very important I want to share here with the MSCI All-World ex-USA Index. It is underperforming short-term Treasuries on a 12-month basis. This is a huge flag. It's a huge warning sign for international markets. Doesn't mean that all international markets are bad or they've gone to hell in a handbasket, but it is a big warning sign, especially according to the MSCI All-World ex-USA Index. When we add all this up, we look at the barometer reading. Barometer reading still tells us, are we risk on in U.S. equities, or are we risk off? We're still risk on in U.S. equities. So just because we had a bad week in the S&P 500 doesn't mean that all is lost. It does give us some pause, but at the same time, we look at the barometer reading, the longer term reading, still positive. So now let's look at a chart of the S&P 500 and see what kind of damage the bears did last week. And here's our chart of the S&P 500. Three things I want to point out. Number one, we are starting the week on support. You can see the week before last, we broke out past this orange line right here through that resistance level. And this is an important concept in this type of analysis. And that is that support becomes resistance and resistance becomes support once broken. So the resistance was broken, prices retrace, and now they're sitting on support. So we'll see if it holds. The second thing is that what we want to take note of is that at the very least this past week was a sell signal. A trigger would be a trading below last week's low. Don't know if we'll get it, but at the very least this past week's price action was a sell signal last week. If in fact the S&P 500 does drift lower back into the trading range, the longer it stays within the trading range, the more bearish it is. We don't know if prices will decline or continue to decline. If they do and they break the bull channel and they stay within this larger trading range and don't break up to the upside very soon afterwards, then it is bearish for the S&P 500 on the weekly time frame. So very exciting week coming into this week in trading in the S&P 500, and what we're looking to see is if in fact we do get a sell signal, break of the bull channel, or if support does hold and we get a shot to the upside. So where do we go this week? What's the plan for this week? First things first, last week, gotta tell you, international position, our last one, our last hope for the international markets. We went down to support. We bounced a little bit. We went down to support again. We were hoping for a Teddy turnaround, but we got a Debbie dump out. And so what did? We got stopped out. We got stopped out of our last international position. It's been a long time coming, frankly. We've been talking about it. We've been lowering, we've been positioning or scaling back and back and back and back on the international for a while now. And this is our last one. So we're out. We preserved capital. And now we're going to take that and we're going to wait for our next opportunity somewhere else. So international markets, done. We're out of them. That's it. No more. Second thing, as far as the commodities, basically, the commodities were down for this week as well. They're still within their trading range, quite a ways away from our stop losses. Many of those, almost all of those, were still in our first position purchase. So a little bit of risk on the table there, but not too much. Second thing is fixed income, our U.S. Treasury, and down again for this week, still above support. But getting closer and closer to getting stopped out on that. So don't know if we'll get there or not, but right now, not really looking good that they're going down to test that bottom support level again. And then finally, U.S. markets. U.S. markets still look good on the longer term. Yes, we had a lot of sell signals last week, and then even triggers depending upon where which market you look at, or which sector or style, whatever. But overall, longer term still looks good on it. So the bottom line is this: for this coming week, as far as new positions, none. Not looking to do anything. We're going to continue to hold on to what we've got. We're going to monitor our stops closely, and then possibly even adjust some up if we get the opportunity to do so. So should be an exciting week in the S&P 500 and the markets overall this week. We're starting out on support, and we'll see if the bulls can hold it, or if in fact the bears get their way and they crush the spirit of the bulls and pull the S&P 500 and the markets lower. So have a great week, and we'll talk to you next time.